Good evening. This is Doc Severson for the Theo Night Report for Tuesday, August 29th. We've had a pretty eventful 24 hours here as we had yesterday's close on the S&P 500 at about 2444 on the futures, and then we had the little missile that got shot over Japan yesterday. Not trying to minimize the impact of that, but you can see how we gapped down and immediately headed lower from here. So we went from about 44 and gapped down to about 24. So about a 20-point reaction to the downside. Then overnight, what occurred was as the European session opened up, that's where the selling really began. Right? So we ended up there around 5 o'clock in the morning Eastern time, and then we started heading higher from here. Now, the key towards understanding today and what happened today is simply to watch the price and nothing else. Keep your head out of the news, keep your head out of market opinion, everything else like that, because what occurred was on the initial move higher, and this could have turned into just another lower high, but what negated that was when the price broke above this level, and that prints a higher low, higher high. We now have a change in polarity from a downtrend back to an uptrend again. And we really kept the hammer on all day long as all the people that went short either in the European session or overnight or right at the open had to sit there and continually cover all day long. Now, this is by no means the end of things, but what I do want to do is zoom out at this point and show you kind of the top-down approach for what I see happening in the market. It's not just most of the time, it's all the time that people lose track of what's happening with the larger time frames, and they really provide so much of an influence on the current trend, as we've seen literally for years now on the S&P monthly chart. It's been pulling this thing higher, right? The weekly chart as well too is still pulling higher. We've not seen any kind of reversal change in polarity in the weekly chart. So as we zoom in and get down to the daily chart, this is where we do see a little bit of consolidation. Now let's keep things in perspective here. From a high at about 2491, we've come down about 71, 72 points, which given the percentage is actually fairly low. It's not very much in terms of percentage. A lot of you that have been trading for a while look at a 71-point move and think, my gosh, that's got to be, a full correction. And it's not. It's just a couple of percent. And so, yes, we have had lower highs and lower lows, but essentially this is nothing more than just a consolidation flag pattern. This is where we start to see the energy build up now in the shorter time frames charts, as we have the daily and the weekly showing that they're ready to trend. Now, here's the key here, where we have to sort of think one step in front of where things might happen. Right now, what this is showing is this morning's bottom might be a higher low. So lower highs, lower lows all the way along. This could be a higher low. If the price is able to rally above there, and just this level here, it's not very much, that's now a change in polarity back up to an uptrend again. So this flag could actually break higher from here. Now think about the implications if that does happen. Everybody's just going to lay back and assume, well, here we go, we're breaking higher into September, and we're going to start to look forward to our fourth quarter rally setting up. And this is where complacency sets in. And this is where I think the danger is for this, is that typically really strong moves to the downside do not occur until a weekly lower high sets up. A weekly lower high sets up. Now, the way that this would basically work out is to see a rally from here, which breaks above this flag pattern here, and comes up but stops short of printing a new high up here at about 2491. If we see the price actually stall out below 2491, look out below. This is where we have to be very cautious about a move to the downside, because that's printing a lower high, and this is where we get that condition where too many people are on the wrong side of the boat with a wrong position and usually much too large for what they can handle with essentially what is a weak hand position. And then all of them have got to exit if the price starts heading lower. All of them will immediately feel the heat, will immediately exit, and this puts tremendous selling pressure. So it's always the weekly lower high that ends up doing all the damage on these charts when it does. So again, we're kind of thinking 3 steps ahead of ourselves right now in this game of chess as it relates to the price action, what could be happening from here. I think it's very unlikely, unless we have some kind of exogenous event, that the price is just going to drop like a stone from the current level here. Anything can happen, which is why you've always got to be open to what happens with the price. Let the price tell you what's going on instead of letting your bias tell you where you think the price should be. Now, just a quick look across the stocks that matter these days, or at least the former stocks that mattered. And here's Amazon, which is kind of leaking lower after a high at about 1083. We've lost more than 100 points on Amazon. So that's not exactly the picture of health, and it's been one of the reasons why stocks have pulled back. Now, Facebook, on the other hand, this is really a very pretty bull flag. So from an exhaustion move to the upside here, where we had total exhaustion, we've consolidated. It's gone in a very typical flag behavior. This thing's ready to bust a move. Watch out for this trend line to the upside. Don't know whether or not it's going to be able to get through 174, but we could see 6 points of movement here, relatively uninhibited, until it hits resistance up here at about 175.5. Right, so watch for this. This could be worthwhile of taking a quick swing on this. Wouldn't want to hold this for very long here in case this one also sets up a lower high. Now, Google as well has been having its share of problems. If we want to look at Google, something that may occur, or something that may need to occur, is the fill of this gap, which is still a massive gap down here. Watch this level here at about 920. If 920 does let go, we're going to see a very, very rapid move down to fill this gap. So it's almost like a vacuum is going to open up and fill this hole down here at about 890. So that is only about a 30-point move to the downside. It could rock markets if this needs to fill this gap and for that to happen. Now here's Microsoft. Microsoft has just been steady as a rock for a long period of time here. It is consolidating on the daily chart up here as well as weekly. This one's ready to go. If this does not break higher from here, this is going to put a lot of pressure on the market. And I will finish out with Apple here. Apple, of course, is coming up on the big September product announcement. Everybody's going to be holding their breath on that. So we're just a couple of weeks away from that. Everybody pretty much knows what's going to happen, right? But it's a matter of what they really do release and whether or not it kind of blows people away, or whether it's like, oh, well, we already knew that was coming out. So will Apple be able to wow the market? A lot of times we've been seeing these as kind of a sell the news event, right? So we saw this last year at this time, actually gave a little pop to the upside and really kind of was the key towards breaking out of this descending pattern, was that product announcement that was in mid-September here, and then it was the route was on the way to the upside, right? So that was a nice technical move there, and it really provided the catalyst to get this thing going. Completely different technical situation now. Now we have monthly exhaustion to the upside. We've seen this occur many, many times before with Apple, and each one of these has generated a significant response, right? A significant consolidation or corrective response to the downside to keep this thing going. Sometimes you got to take one step back to take 2 steps forward, and Apple is a good example of a stock that kind of needs that right now. Could this also become a catalyst to some selling in September? Absolutely. So if you put all these things together, again, I'm looking at near-term positive price movement. So everything on the charts right now, say for a missile being shot over, Japan again in the near future, points to upside price movement. But I don't see it as being violent upside price movement. I don't see it as breaking into new highs. I see it as potentially setting up with a lower high across the board, and that's the real danger here. That is it for tonight's report. Thanks for listening, and we'll see you tomorrow.